Welcome back to the Behind the Wealth Show. Roger Abel here with Elias Randall. Elias, today we're going to talk about millionaires, markets, and mega bills, what everybody listening needs to know to kick off midsummer blues, which are just around the corner.
What is midsummer blues?
You don't know what midsummer blues are? It's like
probably,
the first, I feel like
probably too young to understand the reference.
Well, my baseball coach always used to tell me I had the midsummer blues because you start the season off really excited. Then by the middle of the season, you're like, man, still a long way to go. And there's kind of a lull. And then the end of the summer, there's always anticipation.
Of what?
Like the new thing that's going to happen in the fall.
Oh.
You know, you have the anticipation going in. Then you're like, oh, kind of used to it. Then
Got it.
Come out of it. Then you're into the fall, which, truth be told, fall is my favorite time of year. Summer's great, but I really love fall, especially in Iowa.
Yeah, fall's the best.
But today, I think the goal is to kind of break down some of the latest insights around some of the habits millionaires have. You know, we're back to all-time market highs in the stock market. And I think, you know, the talk, or whether it's just verbiage, the One Big Beautiful Bill Act that's been passed, highlight on some of the things that I feel like our listeners should know that went into law on July 4th. And then just some practical takeaways that we found, and some good, interesting data that we found about millionaires.
So I thought when people just referred to the bill, I thought they just referred to it as the Big Beautiful Bill, because I'm sure Trump.
No, that's what it was called.
Yeah, but then I learned a couple weeks ago that is the actual like formal name, which I don't know how I just didn't. I thought that has to be some sort of like conjecture or something, but yeah, it's called the One Big Beautiful Bill.
Okay, so
It's big and beautiful.
Here's what I was thinking about. When did it become cool to name the bill?
Probably with that. I don't know what were the names
Well,
of
no,
the other ones?
because he had the Tax Cut and Jobs Act bill. And then Biden had the Inflation Reduction Act, which had nothing to do with reducing inflation. And then now we've got the One Big Beautiful Bill.
Right.
The
name doesn't even refer to anything that the bill's accomplishing.
Well, yeah. The only one that made sense is the Tax Cut and Jobs Act, because that actually cut taxes and added to employment. The Inflation Reduction Act didn't do any of that. It's just what they called it. And this one, we don't know what it really does. It's just a big, beautiful bill.
Well, we have six beautiful takeaways.
Did anybody
today
ever name a bill before the Tax Cut and Jobs Act? Like, I don't know.
I have no idea. I'm sure they all have.
I bet
names.
ChatGPT knows.
Well, yeah, because the Affordable Care Act. Isn't that I'm sure that was the name of the legislation for ACA plans. The Affordable Care Act.
That's true. But we already hit on it. There are some takeaways from the Big Beautiful Bill that will affect people out there who are paying taxes. I've spent a lot of time thinking about this. And I think for the vast majority of people out there, this doesn't change a whole lot from their tax situation. And part of it is because most people are utilizing the standard deduction. Like, you know, they increased the SALT cap, or the SALT deduction cap, which if you don't know what that stands for, that's state and local tax deduction. But unless you're itemizing, it's kind of irrelevant. I don't know too many families making under $200,000 that are actually itemizing.
What would their need? Like, what would
they have to make over? They have to have more than
be
$30,000 of deductions.
Yeah, so right.
Like between their interest, their income. Like, I guess if you're making $200,000, you're in a high tax state, maybe you would start itemizing. But if you're in a state you're making $200,000 a household, you got 5% state income tax, that's $10,000. Let's say you pay 5 in property tax, that's 15. You still got to come up with like another 15,000 in itemized deductions before this even benefits you.
So I would think most people would be happy to know that the tax brackets are going to remain the way they are. I would think that's better news than one of the alternatives, which would be tax brackets are reverting or going up. I suppose if the news was they were going to cut taxes more, that'd be pretty favorable for people and they would like that. So I don't know. I guess that part of it, I think most people would feel pretty good about it. Your taxes aren't going up.
Yeah, people's taxes were going up if nothing were done. They're going to remain the same. It's the extension of the Tax Cut and Jobs Act where we still have the same 7 tax brackets. One change, though, there's a $15 million estate tax exemption. So for an individual has a $15 million estate, $15 million is now exempt from federal estate taxes.
I think there's a date for that to sunset. Wasn't there in there like 2030 or something?
I think
like
this
that?
whole bill sunsets in 2030. I don't think it's permanent.
I think, okay, maybe I don't understand it correctly, but it said it makes the tax brackets permanent.
The tax brackets might, but I think there are other provisions that sunset. Some sunset in 2028.
Yeah, so in the estate tax deduction or exemption, they're just going to have to revise that number all the time. Like as long as
they could revise it backwards.
Yeah, they absolutely could, and they may do that. But just with how wealth is now created in our economy, and like there's just some families with massive amounts. I don't know that's as easy to just say, hey, this is what the exemption should be for long periods of time. People are much more wealthy now than they were 50 years ago.
Here's one thing that I think by increasing that number inherently, it makes people think I don't have to do estate planning. I think there's this thought in people's mind that unless I have $15 million, there's no need for estate planning. And that's not true. Everybody needs estate planning. Just maybe not planning for your estate taxes. Because estate planning really is just dictating where your money goes, who's going to make financial decisions, who's going to make medical decisions. But I feel like when I see that happen, people are like, well, I don't need to do estate planning now. Just remember that can change. It wasn't 25 years ago. This was $1 million.
The exemption was $1 million 25 years ago?
Yes.
Wow, that's gone.
It was.
So that's a huge increase to go from $1 million to 15. But $1 million seems pretty light.
For sure it's light. That's not a whole lot of money.
That doesn't seem very practical for maybe 25 years ago it was, but
well, not really.
25 years ago I was 10 years old, so I would have no concept
here it is.
of what that even means.
This is going to blow your mind because you were probably still in high school. What year did you graduate high school?
2007.
Okay, so in 2000, the estate tax exemption was $675,000.
Yeah, that's not enough.
Okay. Then in 2010,
people wouldn't even care if it was that low.
It jumped when Obama took office. It was repealed in 2010. So there was zero tax in 2010. I think that was to be stimulative of
coming out of the crisis.
Yes. Okay. Then it went to 5 million. And it's gradually increased. Tax Cut and Jobs Act in 2018 made it 11 million, and now we're at 15 million. And this 15 million is a lot. But at the same time, if you had $2 million in 2000 and you died, your family would have owed $450,000 in taxes. Truth be told, you've already paid tax on all that money one time. You didn't get it before tax. So I think that's a big change in the bill and the provision that people should know. Also, in there are some new deductions. So there's deductions for auto loan interest. I also saw there's a $10,000 deduction if you buy a car that is assembled in the United States. Fully made and assembled in the United States.
And the most interesting one I thought was tips. They have a deduction for up to $25,000 in tip income.
That's meaningful.
Yeah.
One thing I want to hit on.
Can I start making tips?
No.
Can we have a tip jar? In the office.
I don't think we're allowed to. One thing on the auto thing, though, that people should be aware of, you don't actually have to itemize to claim that deduction. So if you're going to get the standard deduction of around
of
30,000, you go buy a car fully assembled and made in the US, you get another 10. That's pretty beneficial.
That's going to help auto sales.
I think it'll help auto sales for sure. Now, the interest.
Which cars does every manufacturer assemble their cars in the United States?
No, I think very few. I'm guessing there's going to have to be a list associated that says, hey, these are the cars that qualify. I'm going to guess it's pretty narrow.
Yeah.
I think the whole idea there is incentivize the automakers to assemble the car in the United States. Because if you now assemble your car here, someone's much more likely to go buy the car.
Yeah, consumers.
Consumers are way more likely if they get a $10,000 deduction. And they also introduced a deduction for $6,000 for seniors over 65 who earn up to $75,000 a year. Above that, it gets lowered. But I think that's good news for some consumers out there. I don't think in general most people are going to see a massive effect on their tax bill or pocketbook like they did during when the Tax Cut and Jobs Act actually originally came out. For businesses and for quite a few consumers, their taxes did go down. I think the support for businesses is probably understated.
In the bill?
I mean, just the original Tax Cut and Jobs Act, because it allows businesses to get some deductions on their first percentage of income. The other thing it also does, and people don't really think about this, but qualifying equipment purchases, they can depreciate 100% of it. So they can accelerate some of the depreciation.
So that's also an incentive for manufacturers. That should help, right? Because if you can buy new
businesses to buy it, so instead of getting, I think for
it should help their sales, I guess, is what I'm saying.
I think auto depreciation last year was like 60% up front. The rest you had to amortize over 5 years, I believe. Now it's 100. Well, if you're a business owner, you need to buy a vehicle, or you're a farmer, you need to get a tractor.
Right.
More meaningful to get it all up front than it is to have to spread a bunch out over time. So there's just a lot.
Sounds beautiful.
It's the big, beautiful bill. But, all those things, people that are wealthy, people that are millionaires, they pay attention to some of this stuff and they try to figure out where they can go, get tax breaks, get benefits through the tax system in a very legal manner. I had a mentor of mine about 16 years ago. And you know what he told me? He goes, Roger, there are 2 tax codes in America. I go, no, there's not. He goes, yeah, there are. I go, well, what are they? There's the informed and the uninformed tax code, and you have a choice as to which one you're going to be in. That was actually good advice.
Very sage advice.
Seriously, if you think about it, if you're uninformed, you're going to likely pay more than your fair share. If you're informed, you're going to be able to figure out how to utilize the tax code.
Do you think there's a lot of people out there that would like to pay more than their share?
I think they'll tell you there are, but they don't. If they were, why wouldn't they just send it? Why wouldn't they be tithing to the federal government if they wanted to pay more than their fair share? Anybody who has sent extra money and said, hey, looks like you guys can need some help. Here you go.
No,
you're 37 trillion. I'm going to throw you an extra $100.
I don't know anyone who's ever done that. I don't think people would or would do that.
Do you think anybody actually likes paying taxes?
I think there's people that say that it doesn't bother them, but I'm pretty sure when they're writing that check, it stings a little bit. Just on social media is a dumpster fire of political opinions and all this stuff, and even all the opinions that are out there. And I don't mind paying taxes to support this, that, and the other thing. But then when it comes time to make that payment, it doesn't sting at all. Like, you wouldn't rather just keep that money for yourself.
I can tell you it stings.
That's what I'm saying.
Yeah.
And it doesn't matter how big your tax bill is. No one likes paying it.
Do you think people don't like paying it because they don't feel like the money's being utilized properly? Or do you just think they don't like paying it because let's be honest, without tax money, there's no infrastructure. Like there has to be revenue.
Yeah, I think there's certain things everyone agrees that it's nice that taxes pay for, but our federal government has abused their revenue streams.
Well, it's not just federal government, it's states and other things. Yeah.
Right. And if they truly use the money for the things it's just intended, like some of the social programs, infrastructure, defense, I don't think people would complain that much. But like when they did the big audit, the big beautiful audit on the government, sorry, that was a joke. But they're coming out with all these line items, and just like the restaurant bill for the Pentagon that they're charging on government credit cards was like hundreds of millions of dollars. Well, why is tax money helping the people that work at the Pentagon eat meals? The folks, the workers in America, their company's not buying their meals every day.
We haven't bought lunch for a while.
Well, Premier buys some of my meals if there's a client with me, but if I don't,
meals and entertainment 50%.
Yeah, but if I'm for me to feed myself lunch like a normal day, I pay for my own lunch. So I just think, and everyone agrees, and even when everyone agrees, there's been wasteful spending, and then it was really ironic how then the politicians started saying, well, yeah, we know that there's wasteful spending, but you just don't cut it all at once. Well, that's not practical. If it was a privately owned business with all that wasteful spending, guess what would happen? It would get immediately shut off.
Okay, so you're ready for a wild statistic, and I don't know if you know this. Did you know 9.4% of the U.S. population is a millionaire?
I did not know that until I read
the outline. Okay,
read the material to get ready for today.
I just thought about this. So
did you know you're more likely to be a millionaire than to have visible abs?
Come on, where did you look that up?
Did
you do research before this?
No, it was a Grant Cardone TikTok the other day.
Hey.
And he was saying like 9 or 10% of people in America are millionaires. And I think it's like 1% of the population has visible abs.
What if I did 6-minute ab workout? Would I get them?
You might be able to get into the 1%.
That's so good. I can't believe you brought that up. But here's what I'm thinking about. So we have 10% of America that knows how to accumulate wealth.
Yeah, I'm not surprised by that.
That makes good financial decisions. We're going to talk
I wish it was 20% of America.
But think about this.
Or
we have 10% of America that can make great financial decisions, be disciplined, build wealth. But we have a country that's $37 trillion in debt. How can that be? Can't we just get the 10% of the people that know how to do this to figure out how to get us out of debt? Think about it. So
dude, that makes my brain hurt.
We have 10 million people that know how to be fiscally responsible, but we can't figure out how to solve this problem. I don't think anybody wants to solve the problem. There's no incentive for them.
Yeah, there's no incentive. There's no incentive to solve it. And I think in general, there's people that just think the debt doesn't matter.
All right. Well, let's talk a little bit about millionaires and some of the habits that lead to having this mentality of becoming wealthy. And this is actually a research put out by Hartford Investments. And this is the one this is the number that sticks out to me, that if a lot of people listening to this show just kind of grabbed onto, would help them get there. But Fidelity looked over their scope of individual investors, and Fidelity is one of the largest 401k custodians out there. So they have a lot of data on 401k investors. But Fidelity says the magic number, the percentage of income people are saving in 401k plans that have $1 million, the magic number is 17%. And they've saved on average for 26 years.
Checks out.
So here's all you got to do. If you're 60, if you want to retire at 60, take 26 away, start saving 17% by that date, and you're probably going to make it. 26 years,
Yeah.
17%, you're probably going to make it.
Simple enough.
But what it just goes to show that just being diligent over decades and decades and decades starts to add up. I actually had a new person who just started working with our firm. And she said, my goal was always to have my individual 401k at $1 million. And she said, I never thought it would grow if I wasn't working. And she's been retired for a month now. Her husband still works. But so now for a month, she hasn't worked. Okay. 401k investments out of her 401k. She didn't move it yet. She just moved it the other day. When she came here, it was 870, and now it's 905. She goes, I just never thought it would grow if I didn't add to it. And he said, well, it's because when you had $50,000 in this account and the market went up 10%, what you were adding was significantly more than what it was growing, so you never noticed it. But now you've hit this critical mass point because you've been doing this for 25 and 30 years. That just helps you accumulate money very quickly.
Does, and the bigger that number gets, the easier it is for it to continue getting bigger.
And I think it also goes to show that it's hard to become a millionaire overnight unless you know the numbers. And that's called the Powerball numbers. Otherwise, becoming a millionaire, it's a slow process. No.
For most people.
Yeah, granted, you might get into the job that makes a ton of money and you can save it quick. But here's the other thing. Just because you have a job that you make a lot of money at does not mean that you will be a millionaire. It means you have a high income.
Here's a good stat, because 2/3 of millionaires are between 60 and 79, 23%, 50 to 59. So that means 89%. And this doesn't even include people older than 79. So 89% of millionaires are older than 50 years old.
Yeah, it makes sense because it takes that time to get where the money's actually really working.
Right. And there's another, people older than 79 are not even included in this number. So they're
even higher.
Yeah, it's even higher than that.
79% of people didn't inherit their wealth. So if you plan on being a millionaire, inheriting money should not be your plan. It should be, living a modest life, used cars, having budgets. If this is what I always go back to. That the Dave Ramsey did a survey or a study of millionaires, listed the top 5 professions. And if I asked people, what do you think the top professions are going to be? Doctor's always in there, right? Attorney's always in there. Doctor wasn't in the top 5. Guess what was in the top 5?
Engineer.
That was in there?
Teacher.
That's one that stands out because guess what teachers don't make?
A lot of money. But
inherently, I had this discussion with a teacher, who's a client of mine. She goes, why is that? And I said, well, just look at how you live. You didn't become a school teacher to get rich. That was not a priority or a goal of yours to make lots of money. Your priority, your goal was
and you became a teacher, you were confused about what was going on.
You were misled.
Yeah.
And she goes, yeah, that's right. But that also goes to mindset. If your mindset isn't in the world of, I have to make more money to get more stuff, it becomes much easier to buy used cars, much easier to live a modest lifestyle and not worry about keeping up with the Joneses. Because you've already decided when you got that degree, that's what you were going to do.
Yeah, it was not a decision about money.
Right. So I think a lot of it's mindset. A lot of people, why do they become doctors?
I would assume
they want to help people medically. They're interested, but
also comes with a nice paycheck.
But that doesn't mean you're going to become wealthy because
you still have to accumulate the assets.
One of my best friends, a doctor, we had this discussion. You get out of med school, you got $500,000 in loans. You're in your 30s, probably married. So you're going to get a house and you have a good income. So you're going to get a pretty nice house. If you have a kid, your wife's probably going to stay home, right? And it's going to take you a decade or 15 years to pay these loans off. So you get everything paid off maybe by the time you're 50. Well, now to keep your lifestyle the same, the next 10 to 15 years,
you got to save.
You don't get to save 17%.
No.
You're going to have, and what happens? They hit this shortfall because they aren't saving that. They think they're maxing their 401k and doing everything right. But the amount they have to save is significantly higher.
Yeah.
So those are just some things that are out there, you know, how to get to that point where you're a millionaire. Here's another stat that I thought was funny. Ivy League education is not required. Most millionaires didn't go to an Ivy League school.
No.
This is all built really by having good financial habits, discipline. That's way more important than luck or the status you had from a big degree. It's really about the boring stuff in life to get you to the millionaire status.
It is. And $1 million isn't even what it used to be. Apparently, $1 million in 1985 is equivalent to $3 million today.
I thought it would have been higher.
I did too, but I mean, we've had really low inflation.
That's true.
Over a lot of that time
we had
period.
15 years where it's almost like nil.
Right. I think we were talking the other day how back in the 80s, I think start to be considered high net worth, it was like 10 million. And then I think we were talking about how it's probably like more like 30 to 40 million now, which those numbers line up with that. It's about 3x.
3x?
Yeah.
Yeah, maybe. You know, as I think about just good behavior to become a millionaire, I think a little bit about like market timers.
What about them?
Well, people think buying the market, like at the right time, is inherently important. And you know what? Yeah, sometimes it is. But I think back to this last big drawdown that we had in April. And most of our customers weren't, they might have been nervous, but most of our customers were opportunistic. Right?
I think so.
Even me, I tried to be opportunistic. I did my backdoor Roth IRAs, I maxed out my 401k, added some money to the market. But you know what it really got me thinking about? Does that really move the needle that I incrementally bought X amount of dollars in the market, 15% lower? Is that really important? In the big picture of things, it's gonna help.
Depends on how big a chunk.
Most people don't put enough.
Yeah, I mean, if
money,
it's 10,000, it's
okay. Let's say someone put 25,000 in. Okay, you got a good entry point, but it's
nice.
It's a nice entry point, but it's not the difference between 1 million and 2 million.
No,
like it's just.
But
nice.
if you went and bought 2 million at market lows this spring, you're probably feeling pretty smart right now. Feeling pretty good.
I feel pretty smart.
Well, you are.
But here's why I bring it up. I was reading that Invesco. Invesco had like a little slide deck that they released out. And there's an interesting stat in here. I'm going to pull it up. Do you know how many all-time highs the S&P 500 has had since 1957?
I do not.
Over 1,200. The average is a new high every 19 days, okay? But do you believe buying a dip would yield better 1, 3, and 5-year returns, or buying a market high would yield better 1, 3, and 5-year returns on average?
That question doesn't make sense. Buying the dip.
It doesn't. Investing on a market high yielded better 1, 3, and 5-year returns than investing on non-high days. And here's why I think.
How does that?
Momentum. Like, remember how?
But if you bought the dip, your money was invested at a lower price.
No, it didn't say buy the dip. It said invest on a down day. It didn't say buy the bottom. So you're assuming you're buying the bottom.
Okay, I'm not understanding.
What actually happens though? Oh, the market went down 5%. It's a good time to buy. And then it goes down another 15.
Yeah.
It's like falling on it's like falling on a sword. It's dollar cost averaging. Everybody wants to dollar cost average on the way down, right?
Yeah.
How many people dollar cost average on the way up?
They should.
They don't. They buy at one time. They buy XYZ stock. When the market's down 20%, they think they're really smart. They never buy it as it keeps going up. And what'll likely happen? It's a good company. It'll keep going up.
So over time, so the breakdown is buying stocks, so buying the market on all-time high days versus buying on non-all-time high days.
Yeah. Which is counterintuitive to what people think.
Yeah.
What's everybody say? Market's at an all-time high. Should I buy? The answer is yes. Because we will look at 1, 3, and 5-year returns. It's better to invest on non-high days.
Yeah. Well, and once you get into timing, right? It's the psychology that we talk about all the time. Now it's pulled back 5. So are you going to get in? Maybe yes, maybe no. And even this spring, and everyone listening, this spring, market was down. The worst close was like 19.5. Never got to a bear market, but real close. And what was everyone on TV saying? This is probably going to get worse. This is probably going to get worse.
Yeah.
So how many dollars could have went in and then didn't? And it's just like we talk all the time. Well, then the market rallies 5 or 10%. Now are people getting in? So the people with cash on the sideline, right? You've talked yourself out of getting in all this time, and now we're back to close to all-time high. So you're still talking yourself out of it.
Here's what it makes me think. Number one, market all-time highs is a feature of the market, not a flaw. It is. Like, we're going to keep having.
Where did you get that line?
Good. I spent some time.
Did ChatGPT give you that?
No, it didn't. But just think about it. Like, the market's always going to go up, but when the market hits an all-time high, there are a certain amount of buyers who have FOMO. They're like, man, I better get in. The other thing is we always have money flowing in from 401ks and other systematic investments.
Yeah, which is true. It's a persistent. The thing I think investors need to remember, all-time high numbers. It's a persistent number. It always happens again.
Here's what it really is. It's a sign of growth. All-time highs is growth in the market. It's not a signal saying time to pull out. And here's something else.
And is that what you think the market's signaling now?
Yeah.
Remember for growth?
Is it easy to buy the market or hard to buy the market right now? If you're an investor and you're sitting on the side, there's $7 trillion right now in money market mutual funds, in money markets, $7 trillion. It's a huge number on the sidelines, $7 trillion.
It's hard for most people. It's easy.
It's hard to buy. Remember back when I always talked to you about my bond trading days, that anytime it was hard to buy it, that was the time. Once it was easy to buy it, not the time. Like, if the market goes down 10%, there's people, a gradual 10, they're like, oh, it's time to buy it, which over 10 years it probably is.
Mm-hmm.
But in the short term, it doesn't mean it's the right time to buy. I think just people remembering how millionaires created their wealth was slowly, consistently over time. That is the way to create wealth in markets. But I think a lot of these stats are counterintuitive as to what people think. People think you have to buy it at the right time. They think the right time is when it's lower. Apparently, the right time is when it's at an all-time high, which is about every 19 days.
Just keep buying. It's really that simple. Actually, someone the other day, oh, you'll like this story. So the pest control salesman was going around the neighborhood and door knocking, which I thought, man, he's brave. He's got a lot of courage to knock on doors and try and grow his business, right? And so we're talking, and then he asked me what I do for a living, and he goes, he goes, okay, so how do you know when to sell a position, when you've made enough gains on it? So I asked him an upside down question. I asked, well, what was your strategy going into it? to buy and hold. I said, so why would you sell? Because you made a lot of gains. And I'm not going to mention the position. According to him, he's up 100%.
He's double his money.
Yep, double his money on one position.
Well, I mean, if someone told me that, why wouldn't, I mean, if you're, so here's the thing. Yes, if you were in the market, stock market, or
this is an individual position.
An individual position. Well, you know what I would tell them the time to sell some of your gains? You could always just take your basis out. Then the rest is house money.
I thought about talking with him about that, but I'm
I've done that
also in
a
the
lot.
business of I don't like to give free advice to strangers, so I was very
as you know,
vague in my answer.
I'm not good at figuring out when to sell them. I'm better at figuring out when to buy them.
Right.
Because after I sell them, they
I
just
asked
triple.
him, what was your strategy going into it? And then he told me, and I said, well, what would make you abandon your strategy now?
So he thinks it's a forever company.
Yes.
Like
he believes this company will be in the S&P 500 someday.
Yeah.
So that's then my next question. When he said that, then I asked, well, if you're that convicted, then why would you want to sell if that's really your belief in what's going to happen?
So I actually have a statistic on buying on market highs.
Okay.
So this is the S&P 500 back to 89. So it gives us like 25 years of history. An individual buying on a high 1 year later averaged 13.3%. 3 years compared to buying on a low, they averaged 11.8. So they did 1.5% better than buying on a non-high day. Investing on a high day averaged 12 versus a non-high of 10.6 over 3 years. And over 5 years, buying on a market high, 5 years later, averaged 11.5 versus 10.5 for a non-high day.
That's crazy.
It's so counterintuitive to everything that people believe, but here's what it actually shows. Why momentum matters. We were looking at a specific investment yesterday and its momentum. This is why it matters. And I brought this up to you in our conversation. I think it matters more today than it did 20 years ago. Because information travels faster and these companies get run up. Look at the meme stock craze. That's a momentum trade. They're just trading momentum. But once it starts to go, it can take off like a rocket ship. So this is a pretty interesting statistic because I really do think this is so 100% counterintuitive what everybody's been taught. Buy low, sell high. Think about that. We tell people buy low, sell high.
It's counterintuitive to a lot of probably sentiment out there. And just, I mean, a lot of even on the finance media, like it's time to look at your portfolio to reposition. You need to reconsider the risk you're taking, right? Where this information suggests that maybe it's time to have more risk in the portfolio.
You know how little people know about investing and pretend they do?
I'm familiar.
Do you even know where I'm going with this?
No, I don't, but
okay.
I mean, I'm familiar. A
lot
of people,
most people just think the stock market goes up and down.
Okay.
They don't understand there's one key driver to stock valuation.
Yes.
What is it?
Earnings of
That's
the company.
it. Do you know what the correlation between stock price and earnings is? 0.97. It's almost 100% correlated.
As earnings increase, stock prices increase.
If I ask most people what happened to their earnings, they'd be like, what are their earnings? Yet your bug guy's buying an individual stock.
Right.
It makes me wonder a little bit if that's not why momentum stocks or this idea happens, is where you buy it high and then take off, because there's so many people that don't actually understand that earnings is the driver.
Yeah. Yeah.
And he just says, oh, the stock price went up, I better get in. Someone told me.
I do. Yeah. I think the psychology of investors, I think that's what you're getting at, right? Like that psychology that stocks either just go up or down, and the average retail investor doesn't really understand the mechanics of the market, so they just pile in when something's going up.
Well, how many times have you heard?
Which would mean it's not a really great fundamental trade, but it's a momentum trade.
How many times have you heard from someone, well, I don't want to, put it in this mutual fund and lose it all? Well, they don't understand that the only way that happens is if all of the companies have zero earnings. Like, there's no earnings.
I know. It's just, you just smile and say, yeah, no, that would be bad, wouldn't it?
And if you try to explain it to them,
they're going to quit talking to you. So you might as well bring up the weather or something. Yeah, I know, that'd be bad. What do you think of the
Oh my gosh. Well, I think, those three themes, legislation, markets, and, how Millionaire Mindset helps people accomplish their goals is really what we are here to talk to people about. I hope everybody tunes in next week to listen to our show. If you have any questions, email us. We'd be happy to answer them on the air. If you're looking for help, trying to figure out how to manage volatility, we have our volatility guide out there. As we've talked a lot throughout this current year, we expect volatility to hang around. It seems like it's kind of went away the last 60 days, but we never know when it's going to come back. Do you have any other closing thoughts, Eli?
Nope. Thank you for listening.
Thank you for listening.
The opinions voiced in this show are for general information purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial or tax advisor prior to investing. Premier Investments and Wealth Management and LPL Financial do not provide tax advice. Please consult your tax professional. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. There's no guarantee that a diversified portfolio will enhance overall returns or outperform a non-diversified portfolio. Diversification does not protect against market risk. Rebalancing a portfolio may cause investors to incur tax liabilities and/or transaction costs, and does not assure a profit or protect against loss. All performance referenced is historical and is not a guarantee of future results. All indices are unmanaged and cannot be invested into directly. There is no assurance that the techniques and strategies discussed are suitable for all investors or will yield positive outcomes. The purchase of certain securities may be required to affect some of the strategies. Investing involves risks, including possible loss of principal. Rebalancing a portfolio may cause investors to incur tax liabilities and/or transaction costs, and does not assure a profit or protect against loss. Dollar cost averaging involves continuous investment in securities regardless of fluctuations in price levels. Investors should consider their ability to continue purchasing through periods of low price levels. Such a plan does not assure a profit and does not protect against loss in declining markets.